The beautiful people, the beautiful people. Da-da-da. Paulie's back to talk stocks. Let me get this shared out into the Twitter sphere. Welcome, everybody. We're going to talk about AMC stock today. Oh, yeah. I just got a wild hair at my ass. Tweeted out, would you like for me to talk about my reasons behind my investment? And a lot of people said, yeah, let's do it. So we're going to do this. I'm going to try and get this back into the feed we just did. Oh, well. You'd think I'd know how to Twitter by now. Oh. It just looks so much different on my desktop than on my phone. Oh, well. I'm live. So, I think I'm already there. Going to my phone real quick. Happy Sunday night to you all. We'll get started here in just a second. I just want to make sure that the people that asked for this are going to get it. I do not see this on my Twitter. I do not know what's going on right now. I see it here. Oh, okay, it's here. It's here. Finger press, paste. All right. Guys, I recently retired from fantasy football and decided to put some energy into investing and getting some money together so I can retire early. Money's not, the key to happiness, but I think it's the key to freedom, and that's what I'm looking for. And hopefully, some of you can get some freedom out of this as well. Don't smoke, kids; it's bad for you. So, first of all, shout out to everybody on Twitter that asked for this. Jordan Hall, Matt Miles, Jared Pfeiffer, your mom's favorite fantasy football page, Pitts FF, Buy and Sell You. I'm in leagues with Buy and Sell You, known you for a while. Brad Wire, Undroppables, Renshaw, AJ Gardner, Broccoli, Abe, Young Glizzy. I know he's a AMC guy. Rob, Brian Dickey, Steve, Stonyfield, PD, Shane Swagger, seen you for a while. Kanye Rob, another former undroppable, I think. There were so many of us. And shout out to, first and foremost, Joe Albert, who's on Fantasy Football Twitter. But when I asked about the AMC possible squeeze like GameStop about 3.5 months back, Joe immediately direct messaged me and said, if you want to know more information, I'm heavily invested and I'd like to talk to you about it. And we've been talking about it daily ever since in DMs. And we talk actually on the phone about once a week. And I got off the phone with him about an hour ago. Joe's not your everyday, just chill, random dude. He knows the market. He knows patterns in the stock market. He knows indicators for stocks that have been heavily shorted, which is what we're looking at here with AMC. And he knows probably the biggest AMC guy on Twitter and YouTube, Trey Trades. He's one of his top advisors and actually helped him prepare for an interview that Trey did with the CEO of the company. Yes, there is just a retail investor that does YouTube videos and tells us all why we should be invested in AMC and some other stocks, who actually did an interview online at the request of the CEO, reached out to Trey Trades and said, I'd love to do an interview with you, and helped us understand some things about where they were going with the company, and really got us jacked. And Adam Aaron tweets from his own account. He follows a bunch of us. He's responded. He's really gotten the community behind this effort to not only make some money, but to keep an institution of America alive. I mean, going to the movies is as iconic as apple pie, baseball, Monday Night Football. So you're investing in this company, hopefully because you like the stock and you like the company and you like the idea of the movies not going away. The people that are betting against this want to see AMC go bankrupt. To put it in a nutshell, if you short a stock, you're betting on it to go down. And if it goes down to zero, it's 100% profit for you. That's what they did with Toys R Us. Okay. This is what these people do all the time. And shorting's not illegal. It's part of the market. But there are things that the shorters of AMC have done that have been obvious manipulation and obvious illegal, and they don't care. They're in so deep right now, they can't turn back. I would guess that there are hedge funds right now that are bankrupt that we don't even know about yet, because the sheets haven't been looked at deeply enough. And basically, if you know you're going to get convicted of one murder and commit and do one life sentence, what's the difference between another one? Probably a bad analogy. I don't want anybody killing anybody, but the point is they're done for. So their only hope is just to keep shorting the shit out of the stock and get out of the hole that they've dug themselves in. So when Trey did the video with the interview with Adam Aaron, he explained that there would be 500 million shares added to the stock, which would be like basically double the stock, double the amount of the stock, voted on by us shareholders, and how it would be good for the company. But he guaranteed they wouldn't use any of them in 2021, which made us all very happy. But explained that there were 43 million shares of stock back from an issue that they did years and years and years ago, when, by the way, the last two times they've issued stock into the market to what some people say dilutes the stock's actually gone up both times because they did it at the right time. They did it again this week and the stock went up. So really, everything that they had has been put into the market now, and the stock went up again. So I'm sure you've heard about it by now. I've been talking about it for months, but AMC and AMC Squeeze were trending on Twitter this week. Chance the Rapper's tweeting about it. There's Eddie Griffin, the comedian's tweeting about it. A lot of people are tweeting about it. I'm sure you want to find out what all the buzz is about. And this is my best explanation that I put together here over the last 15 minutes. I'm sure some terminology is going to be wrong, and some stuff I might just be flat out wrong. But the overall gist of what I'm going to tell you is right. And it's what we've been looking into for months, and the reason why we're holding the hell out of the stock. Now, just to let you know right now, full transparency, I have over $14,000 invested in this stock, which is a good amount of my, overall liquidity, like a ton. You're supposed to diversify. I'm not diversifying right now. I've got pretty much all my investments in AMC. And here's why. First, let's explain what a squeeze is, all right? Or what a short is, I'm sorry. We'll explain a squeeze later. Short selling is when an investor is betting on the stock to go down. He borrows the stock, he or she, sorry, sells the stock, and then buys the stock back later to return to the lender at a lower price. So they make money on the price going down, just like we're hoping to make money on the price going up. That's fine. Like I said, that's part of the market. But here's where it gets interesting. This is the one chance for you to stick it to the man. These are the one percenters. These big hedge funds that have shorted this stock like to triumph in our tragedy. They're the same people that shorted the airlines after 9/11. So after 9/11, we were all shocked and trying to figure out what happened. And it just changed the world in so many ways. But their first thought was, how can we make money off of this? All right. Now, when COVID hit, they did the same damn thing. They shorted the airlines again, but they also shorted GameStop and AMC and Cost and Bed Bath and Beyond and Carnival Cruise Lines. Sorry, I've got some other ones here. BlackBerry, SOS, Nokia, MVIS, which is actually a personal favorite of mine because they do technology for autonomous driving, by the way. So that's what a short is. Adam Aaron called Trey Trades on his live stream the other day. And when Trey got off the phone, he said that Adam Aaron, the CEO of AMC, said that I can say this. If he were the hedge fund shorting the stock right now, he'd be shitting his pants. He said, you could quote me on that. He knows the situation that they are in. There's also a very good company that does analysis on all types of stocks called Ortex that has been tweeting about AMC for weeks and months because they know what's happening too. They tweeted out recently that there have been 2 separate signals sent for AMC stock that have triggered with their algorithm that looks at all the different indicators. And we won't get into all this, but there's the IV and the RSI and the MACD and the different candles, how they show green and red and the momentum of the stock. And one of them is for a squeeze, and the other one is just an indicator that this is a good stock to get into. Now, just to let you know, the last 12 times they've had the signal to buy for AMC, the average return on that stock was 44% over the next 6 days. Now, the squeeze will, if it happens, and there's a very good chance that it will happen, return way more than 44%. But if you get into this very soon, I think you'll be happy. I am not a financial advisor. This is what I'm going to do, and this is what I've told my friends and family to do, and most of them have listened. Okay? Mark Mills is saying squeeze porn on the chat. Shout out, Mark. All right? And sorry, some of this is kind of, stream of consciousness. I want to make sure I get this all in here. If you look at the Motley Fool, who does articles on stocks and trends and what to buy and what not to buy, Motley Fool has been shitting on AMC for quite some time. Would it surprise you that a major investor in Motley Fool is Citadel Hedge Fund, which is the main hedge fund that's shorting AMC? All right? Have you heard about fake news? It's true. There's a lot of fake news out there. There's a lot of paid actors. Another guy that tweeted about Adam Aaron calling up a retail investor and saying what he said about the hedge fund shitting their pants. He said, did you really do this, Adam Aaron? And he tweeted at him. Now, obviously, he didn't know that Adam Aaron had done the interview, so he kind of looked like a dumbass. But also, several months ago, he made a price prediction of AMC to go to 1 penny. Now, that's very hyperbolic, I think, and very ludicrous. I mean, if you're going to say a stock's going to go to nothing, then just say it's going to go to nothing. He said it's going to go to a penny. Nothing trades for a penny except for penny stocks. If a stock that's normally $12 or $15, $10, $20 goes down to a penny, it's going down to zero. AMC is not going down to a penny. Rich Lightfield has been linked to having investments in streaming services. Oh, there's another coincidence. So the main people that are shitting on AMC are heavily invested in AMC failing. This is why you have to listen to other analysts. If you go into apps now and look for the buy, sell, neutral signals that are down on the bottom of the app, whether it's Robinhood, who you should definitely not be using. I've transferred most of my stuff out of Robinhood, but Webull or TD Ameritrade or any of these, the buy signals are changing now. The analysts are calling this a buy now, whereas before they were either neutral or sell. Some people are saying what it's going to go to 15 tomorrow. Too much hype, too much FOMO. FOMO is what we call fear of missing out in the stock business. That's from Mark Mills. Best entry for AMC right now, the Master's dad said. My brother's going to get into it tomorrow too. It's really hard to predict. I'm going to say one of two things is going to happen. It's either going to shoot down right at the bell, which means you should buy, or it's going to skyrocket off the bell and then it will correct back down. If it rockets off the bell, don't be concerned about catching it because it's your last chance. It won't be. It'll go back down again. And for everybody that gets in this, we've been in this for months. It goes up, it goes down, it goes up, it goes down, but the shorts are there and the shorts have to cover. That's why the retail investors are not selling the stock. When it goes down, it's because they're shorting the stock and they're putting short pressure on it, not because we are selling the stock. Adam Aaron told us what we already thought to be true was that 80% of retail investors own the stock. We own the float. We own the shares that are out there, which means when they have to buy them back, we can sit and hold and drive that price up. That's what a squeeze is. Now, the GameStop squeeze kind of stopped because of Robinhood. Robinhood halted buying, but let people continue to sell. If that had not happened, GameStop could have gone not to just $400, $500, but maybe, double that or more. There's been SEC hearings about it. One of the main Reddit GameStop guys was in on the congressional hearings. I don't see this happening again, but I don't like Robinhood anyway. I think Robinhood is in bed with Citadel, and I think they allow your shares to be used for shorting. So investing in Robinhood and wanting AMC to squeeze is mutually divergent, if that's the right terminology. So that's why most people are transferring their shares and their investments out of Robinhood. I think it's accomplishing something else too. It's making Robinhood find a real share for you, okay? Because there are such things as synthetic shares. Doesn't this sound crazy? Everybody thinks the stock market is, well, I mean, not everybody, but I think most average Joes think the stock market is on the up and up, but it's corrupt as hell. A lot of times when they're shorting the stock, it's a share that doesn't exist. It's a naked short is what they call it. There are synthetic shares out there to they say the tune of possibly 3 times the float or maybe even more, which means when this happens, it's going to be a parabolic boost to the price of the stock. Now be prepared. It's going to go up and it's going to go down. Look and see what happened to GameStop. It went up, it went down, it went up, it went down. It lasted like 5 days. If you get in on this stock, don't be worried about selling the first day it shoots, because this squeeze will last for 3 to 5 days or maybe even more, maybe weeks. I doubt it'll last more than a week, but it's got enough gas to do so. Okay. Couple other people I want to give shout outs to really quick. Toking Lion, Don Mega, Michael Duncan, Mike Reedy. I'm sorry if I forget anyone, but those are some guys that I think jumped in before me or right when I did. So they're in on the stock. Volkswagen's another stock that squeezed, but when Volkswagen squeezed, there was really only 4 or 5 people involved. There's 3.2 million retail investors involved in this stock, as well as Some big companies, some big financial institutions like Vanguard and BlackRock are invested. We get data all the time that these guys have doubled, tripled, quadrupled their positions on our side. So, with all the guys that are betting against us and continue to short the stock, trust me, there are tons of institutional money involved that's on our side that want this to go up, and they keep doubling down too. All right. Hope you're following me here. So, the interest on shorting this stock has been up to 80 to 90% recently. Some of it got returned. On Friday, like 5.5 million shares got returned. There's a lot of different analysts done on this. And guys, there's other people you could go watch. Trade Trades, Wrench Capital, Matt Kors, Kong on Twitter. There's a lot of people that know a lot more about this than me. I just thought as my, fantasy football followers for so many years, you might want to hear it out of my mouth, but do your own research and look at some of these other guys. I'm sure they'll be able to explain it much better than me too. Okay. But I thought you might be able to appreciate my take on it. These stocks got returned because I think some of these guys that bought them to short saw the boom and was like, I'm out. I'm going to give these back. I'm out. All right. But there was so much volume on Thursday and Friday. Thursday was our big day. Friday was a little underwhelming to people at the very end of the day. But I've been telling everybody Friday was a win. Okay. AMC had 6 days of green. It's the best run they've had in stock history for the last 2.5 years. Now, usually when a stock goes up day after day after day, and especially on day 5, it had an over 20% increase. On that next day, it corrects and it goes down. Sometimes the whole 20% gets eaten back, but at least 5 or 10% correction. There wasn't a correction back on Friday. We ended the day like 1.4% up, which doesn't sound like much, but it's huge after the 5-day run we had. And it gained a lot of momentum, I think, for us going into the weekend. I think a lot of people are going to be ready to buy this stock on Monday. Ultimately, if this happens, it's not going to matter where you enter at because the stock's going to be worth hundreds of dollars, if not thousands. I know this sounds silly because it's a $14 stock, but it's the way that this infinite feedback loop can form. There's also another part of the squeeze, which is called a gamma squeeze, which is about options contracts. So you could buy a stock or you could buy an options contract. And when you buy or short, an options contract, you're buying one contract that's 100 shares. The ability to buy that stock later and you pay a premium. You can make a lot of money doing this. It's very risky too. But long story short, on Friday, these either expire in or out of the money. And 986,000 or 998,000, options contracts expired in the money on Friday, which means those shares have to be bought back. Now, the guy on the other side of the trade, if they're smart, usually they've already got those shares because they see the writing on the wall. But I think they are so up against it right now. I don't think they've covered probably at least half of those contracts that expired on Friday. And next Friday, guys, is even juicier. Okay. Like 75% of the people buying contracts are not buying the puts that want the price to go down. They're buying the calls. A 75 to 25% put to call to put ratio is amazing. Next Friday, there's even more stocks or there's even more options contracts that can expire in the money, especially if it goes to $14, $15, $16 a share. There's people that have Friday options that they bought cheaply for $20 a share. If it hits 20 by Friday, these people are going to be very, very rich. I have not started doing any options yet, and I don't recommend any of y'all that don't know anything about it to do it yet either because it's very risky. But there's big money in it. The gamma squeeze happens when these shares have to be bought and paid for, and that affects the stock price, and that's a good thing. And the infinite feedback loop can be basically because the options chain for this stock is not just net through the next 2 weeks. There's people that are already buying options that don't expire till January 2023. not 22. Yes, they're there too. But there's options out into June, July, next January, the January after that. And you want to be in a stock that has a very deep options chain. You don't want to be in a stock that just has options for the next week or two, because the sentiment is that there's a ton of call options out there on the stock. Somebody knows something about the stock. So it tells people, oh man, I should be buying that stock. So this is a good thing. This doesn't even have to do anything with the major squeeze. The gamma squeeze can be an infinite loop just on the options contract. The big squeeze is going to happen when the DTCC, which is the company that insures these hedge funds, gives them a margin call. Okay. So when the hedge funds decide that they're out, and a few of them have already hopped out, and a few of them probably already have covered, but I would say that less than 5% of them have covered, if any. Either the price goes up and these hedge funds go, oh man, we got to get out. This is it. This is going to keep going. It's going to keep costing us money, and they buy their shares back. Or the insurer says, you've got to go buy those shares back. You've got to make yourselves whole. We don't want to be left holding the bag here. This is the insurance companies, right? Okay. There are tons of meetings going on right now. Something's percolating in the stock market. If you're following how big of the dips crypto has taken lately, and some of the big ETFs, the big funds, some of the blue chip stocks, there's a major, not a major, I guess they were a minor hedge fund that did get liquidated recently. Okay. Archegos, tens of billions of dollars lost, this hedge fund company, because they were over leveraged, because they didn't have liquidity. Basically, if they have $50,000, they're probably shorting $400,000 in stocks. And you're not supposed to be shorting that much of your fund. You should only short or have options contracts on 5 to 10% of your overall fund. These guys are stupid. They're shorting 25, 50% of their fund or more. The liquidity is not there. These companies are way over leveraged. They were allowed to be over leveraged by the government when COVID hit, because to sustain the economy, they let these guys keep borrowing more money and investing more money. They didn't necessarily say, hey, go and short all these companies into oblivion. But these greedy bastards, that's what they do with the money. You know that in 2008, when they bailed out these same fucks for shorting that, for the whole shorting housing market deal, most of that money went into the CEO's pockets. So please, if there's another bailout, please tell your congressman that there should be rules that the bailout should go to the little guy, not the CEO. That's what happened last time. They sat up on their roofs while the Occupy Wall Street was going on, drinking martinis and laughing at the little guy that lost all this money. Don't you want to take your money back from these people? Don't you want to take your money back from the people that would want to profit in a time of tragedy? Sounds kind of cool, doesn't it? Also, movies, popcorn. Ugh. Speaking of popcorn, in the earnings call a few weeks ago, Adam Aron stated that the average ticket buyer right now, over the last couple months, is spending 44% more at the concession stand. Now, what do you think they make their money on? I was in the restaurant business for 20 years. I know the markup on some stuff. The markup on steak is not that much. When you order a steak, the restaurant's not making that much money. The steak's very expensive. All right. But when you get the pasta Alfredo for $14, that's about $13.25 in their pocket. They're making a couple dollars off of your ticket. They're making 90% on these concession sales. So if concession sales are up, their profit margin is up. What's also very interesting is Disney had their earnings call recently, and what was very lightly reported was that their movies are going to be released in theaters for 45 days before they're streamed. This is big. The people that bet against this stock figured that the streaming services would take over. They didn't realize that COVID's got people so cooped up right now. You don't want to watch. Do you want to watch Top Gun on your TV at home? Or do you want to take your son to watch it in the theater with some popcorn and soda and candy? Spend all of it. Get that money into the economy. Because guess what? When this squeezes and the everyday Joe has the money, they're going to go spend it. So you might hear some bad things about the economy coming up, but I think if this major shift in wealth happens, that it's going to happen to guys like me. I'm going to go out and be popping pink bottles. I mean, I'm not going to spend it all like MC Hammer, but there's going to be a certain chunk of money that's set aside for, fun stuff, All right. I hope you all are having fun because I am. So these meetings and these rules that are going on right now, they're implementing rules that you have to be less leveraged. You have to show your leveraging on a daily basis if asked to. These rules that used to take 10 or 20 days to implement have been implemented in 1 or 2 days. They want to have all of this in place, I think, before these big squeezes start happening, because the people that are insuring this money are scared as hell. They're all scared as hell. For every bad article you read about AMC, know that one of these guys that are heavily invested in shorting the stock paid for that article, okay? That's the truth. The real stuff is out there. Look for it. The real CNA Finance, Ortex, Trades, Wrench Capital. The real info is out there about this stock and about how heavily shorted it is. This could possibly be the heaviest shorted stock in the history of the stock market. And if this happens the way some of us think it's going to happen, it will never happen again. Doesn't mean that these guys aren't smart enough that they're going to figure out to never short again, but there's going to be rules in place to not allow them to do this ever again. They have dark pools that they could trade on that doesn't even affect the price. Yeah, that's right. These big companies can transact tens of thousands of shares of stock at once in between each other off the market on these dark pools. So there's volume, but it doesn't affect the price. And what I think they're probably doing is showing the sells, if there are any, on the market, and they're taking the buys off and doing it in these dark pools. That's why we see so much volume and volatility sometimes, and the stock price doesn't go up, or sometimes it goes down. Guys, we've been following this for months. If you watch it, you'll laugh. It's funny sometimes. It really doesn't take a rocket scientist, and I'm not, to figure this out, guys. Dark pools have to die by Johannes Gotti in the chat. Thank you, sir. Synthetic shorts are around 500 million, according to this gentleman. That would be interesting. That would mean that for every share of AMC, which is 500 million, there's a synthetic share out there. So for every share you have, you really have 2 shares. I actually think it might be more than that. Here's the worst case scenario, I think, guys. This stock was at $1.30, $35, and that was before it fell off a little bit when streaming services came along, but it was a $20 stock before the pandemic. And there's tons of great Marvel movies coming out, Top Gun, Disney movies. Mortal Kombat just did really well. Kong versus Godzilla actually did better in COVID, like only seating a third of the seats and not all the theaters open. This Godzilla did better than the Godzilla before COVID. It was big. Like, I don't know, like $400, $500 million opening. It was really big. And there's a lot of cool movies coming up. I want to go see the one with the Better Call Saul guy that's like a everyday Joe, but supposedly he's like like a SEAL, Navy SEAL or something, and he just starts kicking ass. Looks pretty cool. I like that one. So what else do we have? We have Robinhood, GameStop, and Citadel being mentioned in these congressional meetings, how over leveraged Citadel is, how Robinhood and Citadel shouldn't be allowed to control so much of the order flow, where the orders are being placed and where they're going. And they shouldn't be. There's too much of a conflict of interest here. It's pretty much like this has been going on for a long time, and nobody really looked into it, or a few people looked into it, but their voices weren't loud enough. The Reddit community, the Twitter community, everybody that's gotten behind GameStop and AMC have looked into this and done some research you would not believe. They have uncovered things about the stock market that people that are seasoned investors for 5, 10, 15 years didn't know. There's people that didn't know about dark pools. There's people that didn't know about naked or synthetic shorting. They know everything. They track everything. They do excellent research. It would really blow you away. Get in some of these discords. A lot of it's crazy. They talk about pineapple on pizza and shit. But some of the DD, what they call it, the due diligence, the research on these stocks is amazing. I think that AMC and GameStop will both squeeze. One will trigger the other. All right. Just so you know, I'm a little invested in GameStop as well. So let's see what else we got. We got no masks per Fauci coming up. That's good. That's going to mean probably more seats for theaters open. And people have been reporting that, movies are sold out. I wanted to go buy a ticket for this movie and it's sold out. I got to go in a couple days. I mean, that's good. That's really, really good. I don't think movies are going to go away, guys. It would be like saying, that they're just going to close the ballparks and play the games, and stream them so everybody can watch them at home. I mean, people want to go watch the game. People want to go watch the movie. There's something in the movies that can't be replicated at home. The sound, the feel. Yes, even your foot sticking to the floor from all the soda pop and whatever else is down there. It's fun. The movie theater popcorn is better than any popcorn anybody has ever made. You got to admit that. Unless you go to a shitty movie theater. There's also some talk of a merger or acquisition coming up. There's a lot of talk about AMC. I think it will happen down the road. I don't want to get into rumors on specific companies because it is just rumor, but something like that would be massive for the stock. If you read that so-and-so bought AMC or they merged or whatever, and you haven't bought the stock yet, please go do so. I think that's about it, guys. I think that's pretty much the whole play in a nutshell. I've been buying this stock for months and getting heavily invested into it because I believe in the company. I believe in the CEO, Adam Aaron, is fantastic. I highly recommend following him on Twitter. He's not certified or verified on Twitter for some reason, but I kind of like that. Makes him one of us. All right. I highly recommend watching trades on YouTube, Wrench Capital, Matt Kors. There's some great guys out there that do some great stuff. If you want somebody that'll really tell you like it is and isn't always bullish on AMC, Tyler Wills is a guy that's, been very, very transparent. Andrew Mackins, Jeffrey, I like this guy too, Jeffrey Forbes. There's a guy called Just the Stock Guy, and his thing is an ape with a barcode. And by the way, we call ourselves apes. It's not derogatory or anything. And this is how I think of it, all right? There's the bears and the bulls. Everybody that knows that, even if you're not in the stock market, you know that the bear and the bulls outside the New York Stock Exchange, and the bulls run. So bulls think a stock's going to go up, and a bear hibernates and doesn't do much. So the bear thinks the stock's going to go down. You know what apes do? Apes just sit there and you can't move them off their position. You ever seen the big gorilla at the zoo or whatever, and he's just sitting there? What's he doing? He's just planted. Is anybody going to get him to move an inch? Mm-mm. That's what we do. We buy and we hold. We just sit there and we hold. All right. Be prepared for some crazy turbulent shit. But I'm not selling at $40, $60, $80. I'm not selling at $100. Okay. I'm not going to tell you my price target, and I'm not going to tell you my plan. If you want to DM me, I'm going to write out my price target and my plan, and I'd be happy to DM you and let you know what I'm going to do, but I don't want to put out into the YouTube space where I think it can go. But let me tell you that no one really knows the potential of where it could go, because that's how big it could be. We really don't know. But don't take the little gains. I'm telling you that right now. This could be life-changing money. I'm not telling you or asking you or saying that you should put your rent out there or your kids' college fund or anything. Don't ever
invest anything that you're not, willing to lose. But I could pretty much guarantee you that you're not going to lose a ton of money on this play. I would say there's a 5% chance that you lose money. I would say that there's a 25% chance that you double your money or close to it. And if you hold, the other 50% chance is this squeeze. It's literally that close, guys. It's literally that much of a certainty amongst us apes. Hashtag AMC squeeze. Get it trending. Just throw $100 in there. All right. Buy 10 shares, 8 shares. If I'm right, you'll be still really happy. Again, I'm not a financial advisor. I'm just saying, if you asked me what you should do, I would say at least throw $100 in there. I've got way more than that. I told you how much I have in there. My brother's going to buy $500 worth tomorrow. It's a chance for us to stick it to the man. It's a once in a lifetime opportunity to exponentially grow your money in a very short amount of time. This usually doesn't happen. This many people don't know a stock's going to squeeze. They didn't know how easily we would be able to get this information and relay it between us. The age of the internet, how fast things happen. They weren't expecting this. Even GameStop was caught off guard. They didn't have the conviction that we have to buy and hold. People got scared. They sold it when it was $80. I know somebody that sold it when it was $80 and doubled their money. And they wish to God they would have waited till it was $480. But still, they made some money. But I'm just saying, don't be that guy that buys it and sells it with a little bit of gains and later on goes, oh my God, I could have retired off of that shit. And that's what I'm planning on doing, retiring very soon, reinvesting in blue chip stocks. Okay. Here's a little bonus part. This is the double dip part. What happened when Archegos got liquidated? Certain blue chip stocks just took a dive out of nowhere. It doesn't happen. Blue chips have a 1 or 2% swing. I mean, you're in them for the dividends and you're in for those little tiny gains. By the end of the year, you're 8 or 10% up. It's better than a savings account. Discovery Channel stock went down like 40% in one day. Well, that's another part of Archegos' investment. And they had to sell that to cover their positions. So all these hedge funds that are shorting GameStop and AMC have blue chip stocks in their arsenal that they're going to have to sell. So the double dip is when we get their money from the squeeze, we can buy their blue chips back super cheap. And they rebound so fast. Discovery went back up in 2 days. The easiest play on earth was buying that Discovery stock when it dipped, but it only dipped for 1 day. You had one chance. So we don't know what all these hedge funds are invested in, but we know that Citadel, the main company, is invested in Google. So if I'm right, Google stock is going to take a dive. And guys, these funds are going to be invested in companies like Microsoft, AT&T, okay, Apple, big blue chip stocks. And I would wait because the market might have one hell of a correction here. You see the crypto going down? The hedge funds had money in that crypto and they're liquidating it now so they can pay us. And they're going to have to liquidate their blue chip stocks to pay us. So take their money and then take it again. Okay. Am I greedy? Yeah, I'm greedy. But at least I'm not a greedy bastard that's trying to short a company into oblivion. I'm trying to make a company profit so everybody can go, get a hand job at the movies. For that, I'm out.